Forex is the world's biggest market, and whether you are new or a little bit experienced in it, today we're going to talk about, from a big picture, how you can actually approach and make profit in one of the world's most active and super large trading markets. Let's get it. Hey everybody, welcome back to the channel. My name is Nick. I am an active trader and the head trader here at A1 Trading, a small trading firm and financial news station here in Atlanta, Georgia. What we're going to be talking about today is what Forex actually is. Whether you're brand new to this stuff or you'd like to know a little bit more information about what the actual currency market is, that's what we're going to try and accomplish to showcase and theoretically talk about today, just as a broad concept. So first of all, subscribe if you're new to the channel. This course that we're putting together here is 100% free. I hope that you're enjoying and getting value out of it, but make sure to subscribe so that you get more content out of it in the future. So here's the thing. Forex stands for foreign exchange. If you're brand new to this stuff, you may have heard this thing called FX, the currency market, but what you need to know is that it is the world's largest market. In fact, if you think about the stock market, think about a drop of water in a bucket of water, and that's like the stock market compared to the Forex market. The Forex market is massive, and it trades $5 trillion, gotta get my B's and T's right, $5 trillion a day. And volume, it goes through the currency market. That's an incredible amount of money, and it dwarfs the size of any other markets, including the stock market. So let's talk about what currency traders actually trade. Obviously, they trade currencies, but what does that mean? How do you trade a currency? Well, active traders are similar to merchants throughout history. You know, when you had people like going across the world to trade different goods and services and products around the world, they used to physically cart things around. Well, nowadays we've got computers and things like that, and traders are like modern day merchants. They go throughout trading currencies for one another, right? And basically you're talking about things that are like the euros that you've heard of, or the US dollars, Japanese yens, British pounds. There's a bajillion currencies around the world, but some of the main ones are what most active traders are focusing on. And what they're actually doing is they're trading these values relative to one another. Believe it or not, the value of the euro or the US dollar is actually rising and falling. And more importantly, it's doing so every minute of every day, all the time. Anytime you're using your currency, wherever you are in the world, whether you live in Europe, the US, Africa, Asia, you're using some form of currency, most likely in your everyday transactions. And just by using it, you're actually contributing to the supply and demand of that currency, believe it or not. So it's kind of cool to kind of think about traders. To some degree, we're all involved in the currency exchange every single day when we transact. So let's talk about a very simple concept for a second. We've talked about currency traders trading currencies, but how do you actually make money trading currencies? Well, what we do is we, as traders, we trade currency pairs. We actually take one currency, compare it to another currency, and we trade which one we think is going to be stronger or weaker. Think for a second if you've ever bet on a sports game, or you've had a side bet with a friend or something on who you think is going to win a soccer game or a football game or baseball game, basketball game, whatever you're watching, right? Well, this is what happens basically in the currency market. We have to bet on a team to win and a team to lose. This is what we would call a currency pair. Whether you're trading the euro against the dollar against the pound, the dollar against the yen, there are many different team exchanges or matchups that the currency market offers us to bet on or trade. Let's take a look at a very simple example. Let's say we want to buy the euro against the dollar. We believe that the euro is going to strengthen. We think that the dollar is not as attractive. And in that team matchup, we think the euro is going to win. Well, in this case, a currency trader could essentially buy the euro against the dollar on the euro-dollar exchange, or the euro-dollar currency pair. Very simply put, we're just going to buy euro dollar, and let's say that the market appreciates, we go up on the euro dollar, and we see an opportunity to close out a position and make a profit. This is what we would call a buy trade on the euro dollar. We made money just by holding on to that changing or that rising price change in the euro against the dollar. What this means is that the euro did in fact strengthen against the US dollar after we took a buy. Okay, so let's talk about a sell example. This is a little interesting. Believe it or not, you can actually trade the currency market to the downside, meaning you can sell or short a market and make money just by the market going down. So let's actually reverse what we just said. Let's say we actually think that the euro, our team idea, right, is actually going to do less well against the dollar. Let's say it's actually going to lose out. We think it's going to go down relative to the dollar. We can make money shorting or selling the euro USD currency exchange or the currency pair. So for example, you can see in this picture, let's say that we shorted the market up atop there, and then we actually held onto that as it went down and then closed out our sell position or our short position. This is how currency traders make money again and again. They buy and sell the exchanges and ride the momentum that could potentially happen in the markets. Now, of course, you can also lose money if you were to sell this and it were to keep going up, or if you were to buy a currency pair and it continues to go down. You can also make or lose money just by trading these exchanges. We'll talk about ways as we get along in this to manage your risk and potentially make money from prices moving in your favor as we get further along in the course. So, Forex is huge. Here's what you need to know. When I mentioned earlier $5 trillion a day traded, that's a huge figure. It's a lot of money. And we can actually be a part of this even as individuals. Traders everywhere around the world involve themselves in the currency exchange. The cool thing is that this is not something that's just unique to US traders or European traders. It's people from Africa, from Asia, from South America, from North America. People can engage in currency exchange all around the world, and that's why it's such a big marketplace. Traders happen from all over the place. There's traders of every size. There's the everyday, perhaps stay-at-home parent or part-time worker who trades currencies, or there's all the way at the top institutional professionals and high up traders and people working at Wall Street that perhaps trade currencies as well. There's a whole range of people who do this, which is really cool. And it's so big, fun fact, that if you were to place $1 million order, let's say you were to buy 1,000,000 euros against the US dollar, it would do practically nothing in the market. We call this liquidity. There's so many people trading this stuff at the same time that the Forex market is very liquid, which means we can get in and out of trades very, very easily. Think for just a pause for a second. Let's say you had a house, right? You want to sell your house. And let's say that the market's not great at the time. You want to sell that house. We would call that pretty illiquid, right? That means that it's kind of hard to get your money out of your investment. When you're trading Forex, one of the biggest perks is that if you want to get in or out of a trade, it's like that. It's so easy to do and so quick to exchange your money in and out of the markets, which is kind of awesome. So we talked about those theoretical trades, but how does a retail trader, how does the average person start taking positions? Well, us retail traders, which by the way, a retail trader is the average person. It's just somebody who is, your everyday person, just a citizen, not like a big banker or anything like that, just a regular person. I would be considered a retail trader. I'm not working at a bank or anything like that. I'm a retail trader. So every retail trader needs a broker, and we'll discuss this more as we go along. A broker is fairly easy to sign up with. They have platforms that you can trade on, and we'll discuss choosing the right broker as we go along. But just know that you do need to actually have a broker account and terminal set up to actually take trades. They're very easy to sign up with usually, and to gain access, you just download their terminal and you can place trades. We'll talk about that as we get along. That's probably not our primary focus here, but just know conceptually that is how we are going to interface or interact with the markets. So the broker, by the way, if you submit an order to your broker, the broker then processes that order into the actual currency exchange, and they're kind of like that middleman opportunity to buy and sell currencies. They allow you to do that. How does a trader actually make money, and how do they decide whether or not to buy or sell a currency pair? What we talked about earlier was cool on paper, but how do you know if a currency pair is going to go up or go down? That's probably a very reasonable thought process, especially for a newer trader. How do you know it's going up or down? Well, currency traders never know with certainty where the markets are going. That would be trying to say, I know how to predict the future with 100% accuracy. I definitely don't. But what I do know is that there are things that we can do to try and forecast. There are things, just like a weather channel will try and forecast the upcoming weather for the next week. Currency traders try and forecast where prices could go next and where they are likely to go next, and they can trade concepts based on probability. Good traders use probability. They don't use certainties, because certainties in markets truthfully don't exist. That's probably why your Uncle Joe or whoever told you about Forex being a scam or whatever, that's probably why they think that is, because they may have perhaps thought that trading offers certainties or anything like that, and when it didn't work out, they called it gambling. A lot of people will call trading gambling gambling without actually knowing that there are professional traders. One thing I like to say, just as a side note, a lot of times people will say, you know, trading is gambling, but there are such things as professional traders, but there's no such thing as professional slot players if the slot machine is truly being played fairly. The casino has an edge, and inevitably you're going to lose money. Well, in trading, it's not necessarily the case. There are edges that can be found, and the average person can't actually consistently profit from the currency market. That's why there are professional traders. So once a trader decides to look at the markets from a different perspective, they start to kind of pick and choose how they want to do their analysis. Now, there's many ways of doing analysis, but let's take a top-down approach at looking at what analysis for a currency trader might look like. There's technical analysis. This is probably the most popular, most familiar one. This is basically look at charts, looking at previous price actions historically to try and make predictions as to what could happen in the future. If you know that a car has been selling at $3,000 for the last 6 months, if price goes up to $3,000, you know that's probably a reasonable price, right? If it goes under, you know it's probably a buy, and if it goes over, it probably is too high, right? So that's the idea. We're trying to use historical measurements to try and gauge where prices could go further into the future using that information. And oftentimes we do this with candlestick pattern charts, which is those charts that you often see with opens and lows and closes and all that stuff, which we'll cover as we get along in this course. But we call this charting often. This is very much what people refer to when they talk about charting. Okay, so next up is fundamental analysis. This one's a little bit more complicated, but it's basically looking at like the economic health of an economy, right? We talked about the euro, or we talked about the dollar. If you're looking at the US dollar, that obviously represents the US economy to some degree. There's some correlation there. So of course, if there is strong unemployment trends, if things are going very well in the US, perhaps the US dollar could be strengthened by that. We can talk all about fundamental analysis as we get later on in the course, because this is definitely something that we're going to need to warm up to. But just understand on a broad scale, fundamental analysis is the economic health behind a currency or an economy. Sentiment analysis. This one's kind of cool. This is the idea of using what the overall crowd thinks about a particular currency to try and trade with that. And again, that gets pretty complicated pretty quick, but just understand we are going to be using crowd sentiment, whether it be the average person on the street or maybe institutional traders, for their sentiment to try and gauge, well, what do other people think and how can I trade accordingly? Is there some sort of edge that we could carve out using that? We'll talk about that later on in the course as well. Before we end this video, I do want to say if you would like to join our free Telegram channel, there is a link down below in the description. And also, if you would like access to our free technical analysis guide, we touched a little bit on that, on charting and things like that. If you would like our free downloadable PDF guide for technical analysis, we do have a handbook available, again, 100% free. All you've got to do is follow the instructions that are coming up on the screen right now, but send us a DM on Telegram. There is a link down below in the description. Send the message technical guide to our team and we'll send you a copy 100% free, no questions asked. Thank you so much for supporting the channel by just watching and leaving a like if you enjoyed it. Make sure to subscribe if you want more free trading content. And now, popping up on the screen, we've got our next video in the series. Don't miss this. We've got more lessons coming, more important things for you to learn step by step to improve yourself as a trader. Thank you very much for watching, and I hope you have a great day.